With Ghana tightening capital flows and Nigeria looking at selling state assets, is Africa entering a new era of strategic economic self-defense? Good morning and welcome to another power-packed episode of Business Week. Ghana caps offshore investments to defend the Cedi as it nears the end of its IMF program, while Zimbabwe projects its fastest growth in more than a decade on the back of reform momentum. In Nigeria, the federal government lines up 91 state assets for potential sale, and the Central Bank of Nigeria brings Bureau de Change operators back into the official FX market to ease currency pressures. Elsewhere, Google parent company Alphabet issues a rare 100-year bond as AI spending drives a surge in tech borrowing. And Anthropic, another AI giant, secures a staggering $30 billion funding round at a $380 billion valuation. The U.S. House of Reps delivers a rare bipartisan pushback against President Trump's Canada tariffs. And on the continent here in Africa, Dangote says its refineries, crude and petrol units are now running at capacity in tests. That's a major milestone for Nigeria's downstream ambitions. Later in the program, we take a look at Africa's startup and venture building landscape. Now, if you missed any of the big business stories of the week, don't worry, I'm here to help you catch up as always. I'm Rolake Akinkuwe-Filani. Stay tuned. Okay, so we start with a look at markets and commodities. Of course, starting first with energy commodities. Oil eased, gas slid, but felt like consolidation, actually, not stress. If you look at what's happening there, Brent fell 1.42% and WTI dropped 2.28% as traders locked in some gains. Natural gas also declined nearly 10% on milder weather forecasts, while gasoline slipped by 2.56%. It was not such a great week for the energy sector, but altogether not a breakdown as well. Let's look at what's happening in Nigeria's stock markets. The NGX rally was strong. Banks and industrials leading the charge. The all-share index surged 6.16%. Week on week, Zenith Bank, GTCO, Access Holdings saw renewed demand. Dangote Cement and Voa Cement also provided the industrial backbone there. The deals and volumes dipped slightly, but value traded jumped 22%. Bigger, more confident positions there, and institutional investors probably at work. In Africa, the week delivered one of its stronger weeks, with Ghana and Kenya as the standout rallies here. The Ghana Stock Exchange surged 12%. Kenya and Nairobi rose nearly 7%, with support from names like Safaricom and a few other banking names. South Africa's JSE gained 0.44%, and Morocco's Massi added 1.45%, supported there by financials and a few industrial names. But momentum did improve across the continent generally compared to the previous week. Now let's look at Europe. Europe inched higher, led by mostly energy and industrial names. The Euro Stock 600 rose 0.14%, while the FTSE 100 gained 0.76%. We saw names like Shell and BP providing strong support. Germany's DAX added 0.72%. Autos, BMW were great names there, helping that rally. France's CAC 40 edged up by 0.31%, as Spain's IBEX was the outlier in the week, down 1.53% week on week. That's it for the markets. Now let's look at what's happening with the top picks from around the world. I will start here with Ghana. Interesting development here from Ghana's Securities and Exchanges Commission, which is putting new caps on the amount of investments fund managers can make in overseas securities. So the Ghana Securities Exchanges Commission has introduced a 20% cap for foreign investment exposure by Ghanaian fund managers in overseas markets. So local fund managers must cap their offshore events at a total of 20% of their total portfolio, total assets under management. It's a dramatic cut, actually. And if you've already been exposed to overseas markets, you've had pretty much all of your portfolio already overseas exposed to overseas markets as a Ghanaian fund manager, then that cap is actually 70%. So two different thresholds here, 20% for new fund managers and new portfolios of investments, and 70% for those already exposed to overseas markets. Now, you're probably wondering why this measure. Well, the whole idea is really to ease foreign exchange pressures in the country and help to support the Cedi. The government is trying to shore up its reserves, trying to ensure liquidity within the system. Ghana is coming up to the end of a 3-year IMF program in August 2026. This was part of a whole series of macroeconomic reforms that also saw Ghana restructure its debt and work to restructure its debt with its external creditors. We're seeing improvement in the country's macroeconomic performance. Inflation has been down to an all-time low. We saw the Cedi stabilize significantly last year, but the Cedi didn't start this year on such a good note. So I guess the measures by SEC are part of a strategy to ensure that capital stays more local, easing pressure on demand for dollars, easing pressure on the local currency, the Ghanaian cedi. Now, interestingly, the Ghanaian government under President John Mahama does have an ambition to increase the country's foreign reserves to about $20 billion over the next 2 to 3 years. So big ambitions there, which will, of course, will be supported by this new domestic policy. We will expect to see fund managers restructure their portfolios in line with this new directive from Ghana's securities regulator. Let's take a look at what else is in the top picks. Well, Zimbabwe, also good news for Zimbabwe in terms of its macroeconomic fundamentals. Forecast growth could be up to 10%. That's according to Zimbabwe's finance minister. He was speaking on the sidelines of mining in Daba in Cape Town, George Giver Matanga, and he said growth could actually reach up to 10%. Now, that for Zimbabwe would be a 14-year high, somewhere around 8.5 to 10%. And this is also part of a 10-month IMF program for renewed fiscal discipline in the country, which is helping to shore up performance across key sectors, agriculture, the export sector, mining. We're seeing production really stabilizing, mining lithium, for instance. So Zimbabwe is benefiting from some of the recent reforms by the government in that country. And in fact, inflation is now down below 10%, right? In the last 2 decades, you wouldn't talk about single-digit inflation in Zimbabwe, but we're seeing that really happen. A good sign that the economy is on the right track. About 2 years ago now, there was almost 2 years ago, the introduction of the ZiG, the Zimbabwe, new Zimbabwe currency that was pegged to gold reserves. And now we're seeing reserves also exceed $1.2 billion in Zimbabwe. So economic confidence gradually returning to the country. And we do hope the country does reach those targets as declared by the country's finance minister. Let's see what else is in my top picks from around the world. Well, African startup funding. I will be talking about that a bit more in the show with Lindsay from Delta 40. But the big news here is that January fundraising figures didn't do so well, $174 million. That was across 26 deals. So what we're actually seeing is bigger ticket deals focused on companies that are cash rich. But compare that $174 million to January 2025, when the figure was $276 million. We're seeing a slowdown in appetite from investors. And the fundraising size actually covers equity funding, debt funding, grant funding, and other types of blended funding. What does this say about the future of financing for tech startups? Well, overall, the picture is still more rosy than it was a decade ago, right? Even if you look at 2024, just in 2024, January 2024, funding for Africa's tech startups was about $85 million. So we're seeing an improvement, even though this year's January performance is not as good as last year's January performance. And of course, the key sectors here still enjoying that deal flow: fintech, mobility, climate tech, agri-tech, industries that have tech on the back of their names. We'll be talking about that a bit more on the show when we drill down the numbers a bit more. Let's look at the next thing in the top picks here. Well, Nigeria, it's been big news all week, is looking at selling state assets. Now, about 91 federal assets across everything from oil, power, aviation have been billed to be part of that sale. The announcement from the finance minister was a bit short on specifics, but we expect that in the next few months, we will see more coming out of them. Now, some of these sales could be full-on divestments or sales. Some of them could be public-private partnerships. And the whole idea is part of President Bola Ahmed Tinubu's strategy to reduce the fiscal burden and stress on the state and boost investment. Of course, people will be asking questions around the transparency of those sales, and we expect to hear more from the government around that in the coming weeks and months. And finally, news coming out of the US here. The US House of Reps has voted 219 to 211 to repeal Trump's Canada tariffs. Now, this is a big one because tariffs from the US and Canadian goods had risen to about 35% in the midst of the dispute between both countries, originally linked to the fentanyl issue that the US had been hampering on with the Canadians about. But now 6 Republicans actually joined the Democrats to vote and repeal that tariff move with the argument that the tariffs were hurting their constituencies and local economies. Now, the big thing here is that Trump could obviously still veto this, and that is a very highly likely prospect. But I think what this sends a signal about is that this could open up a new front in acting as a bit of a check and balance on Trump's trade policy and US-Canada relations, obviously at stake here. We'll be following that story very closely, as we have most global trade stories in this season. That's it for my top picks from around the world. Let's now take you to some of our other top stories from around the world. We start with Google parent company Alphabet, which on Tuesday issued a rare 100-year bond as part of a $31.5 billion global debt raise, reflecting surging borrowing amongst US tech giants to fund AI expansion. The Century bond is the first by a tech company since Motorola in 1997. That's according to the London Stock Exchange Group data. Alphabet sold £5.5 billion in sterling bonds, including a £1 billion 100-year tranche priced at 6.125% interest rate. Still on artificial intelligence, OpenAI holds the largest private tech fundraising round on record, and rival Anthropic now ranks second. What are the numbers? Anthropic closed a $30 billion funding round at a $380 billion post-money valuation, more than doubling its value since last September. In other news, Mercedes-Benz says its 2025 earnings more than halved, hit by a $1.2 billion impact from President Trump's auto tariffs, warning about further pressure ahead. The German automaker posted operating profit of 5.8 billion euros, down 57% year-on-year and below expectations. It cited tariff costs and intensifying competition, particularly from Chinese manufacturers. Dubai's luxury property market continues to defy slowdown expectations, with demand for ultra-high-end developments extending into 2026. Developers report sustained momentum in branded and premium residences. H&H Development has launched pre-sales for its flagship Janu Dubai project, for instance, with average apartment prices around $10 million, driven largely by wealthy overseas buyers. South Africa dominates the continent's real estate investment trust REIT landscape, accounting for over 95% of Africa's estimated $29 billion market. The disclosure comes from a recent report by Fortran and Company titled Insider Look at Africa's $30 billion REIT market. The report highlights the significant concentration of listed property assets within South Africa, despite the gradual emergence of REIT structures in other African countries. Now to Kenya, the central bank there anticipates going into purchase of gold, its governor said on Wednesday, becoming the latest African country to look to buy the precious metal as a way of diversifying its reserves holdings. Other African nations topping up their reserves in gold include the Democratic Republic of Congo, Rwanda, and Namibia. The South African minister spoke a day after the Central Bank of Kenya cut its benchmark lending rate by 25 basis points to 8.75%, aiming to further stimulate credit growth. The Bank of Zambia has reduced its benchmark interest rate for the second consecutive meeting, cutting it to 13.5% from 14.25% as inflation shows clearer signs of moderation. The decision was announced on Wednesday in Lusaka by Governor Denny Kalyalya following the Monetary Policy Committee meeting. The rate cut reflects growing confidence among policymakers that inflationary pressures are easing faster than earlier projected, supported by currency stability and improving macroeconomic conditions. Nigeria's central bank has approved licensed BDC operators to participate in the Nigerian foreign exchange market, allowing each bureau de change to purchase up to $150,000 weekly. The February 10 circular follows a widening gap between official and parallel rates, which recently crossed 90 naira for the first time in 3 years as authorities attempt to ease market distortions. The Dangote refinery says the plant is now working at a full capacity of 650,000 barrels per day. In a statement on Wednesday, Dangote refinery said operation reached full capacity after the company fully restored and optimized its crude distillation unit and motor spirit production block following scheduled maintenance. The refinery said the units are now running at optimal performance, further strengthening the steady state operations of Africa's largest oil refining facility. Well, that's all we have time for now.